Hello traders, petar.jacimovic here from vikinganalysis.com. I want to post the update on the USD Japanese yen on my positions. If you follow my work, you probably know that I'm bullish on this currency pair since from the level 100 to 30, 100 to 35 level. The position is made basically because of the fundamental reason. The fundamental reason is was the key. And I spoke about on my webinar. If you followed my webinar yesterday, I spoke about that fundamentals drives the market, and very fast, and I will explain you very simple that for example, why I choose the US Japanese yen. If you didn't check my webinar, basically everything is the supply and demand. So the institutional buyers and sellers basically like to have the strong fundamental view, the strong fundamental conditions, and I choose the US Japanese yen because of divergence in the politics of the central banks, and because of the recent comments from the key persons from the central banks. So Yellen and Kuroda, basically. The Yellen, she said that we may see higher interest rates are possible in the US, and that increasing in the rate have strengthening. Okay, so it became more stronger. So that was a very good comment for the dollar, and that's why price reacted strongly. From the other side, Kuroda, a few days after the Yellen, he said that Bank of Japan will not hesitate for further easing, and which actually means that for further buying assets and ETFs and so on, which will then weaken the yen. So we have the divergence in the politics. The key persons from the central banks gave the clear signal for the investors and for traders, and basically I took the trade based on the fractals and the price action. So nothing special here. And by the way, the key point is basically to find the good divergence in the central banks and trade that currency pair. Once you found that, the price action also showed that divergence, and after the Yellen comment, price spiked higher. Also, here in this volume indicator, you show the massive spike here, so strong sign of strength. Now I use the fractals, and it's a very simple trading here once you understand the fundamentally and the reason why you are in position. Okay, so we got the fractal here. For you who don't know what's the fractal, basically it's a 5-bar structure where for the up fractal, which is this one, we need to have the highest high here in the middle, and that bar need to have highest high. So to left from this bar need to have the lower highs, and to right from this bar and forward this bar need to have the 2 lower highs. So as you see, they got lower highs, and this from the left side got lower highs. This is a fractal. Okay, scroll the fractal up. The opposite is fractal down. The price, the bar should have the lowest low, and 2 bars from left side need to have the higher lows, and from the right side need to have higher lows. Okay, left and right. So this 5-bar structure made a fractal. Fractal, it's also the second name of fractal is changing in the dynamic, let's say changing in the dynamic. And the fractal, how we use the fractal, the Bill Williams spoke a lot about the fractals trading. He's very good educator and trader as well. And simply the reason for this, the reason for my buying, starting from 100 to 30, 100 to 35, is basically the fundamental. So the reason is fundamental, okay, because we got divergence between 2 central banks, and as long the fundament is like this, I will add positions and I will keep my buying. and try to add, if I see the opportunity to add new positions. Okay, so I started to buy, and the breakout of the fractal, so the one tick above this fractal, so this swing high, 102.38, I bought. 102.36, when the price rejected a little bit, I also added one transaction here. Okay, and I secured already these positions, and I'm in plus about 80-90 pips to 100 pips on this position. Okay, so the reason is fundamental aspect. The reason, and in my mentorship program I'm explaining a lot about this, because many of the retail traders, almost 80%, they base trade on the technical analysis. Okay, so you think that technical analysis is basically what drives the market and what creates the liquidity, but it's actually totally opposite. That changing in the price is the last thing what will change. First of all, that there will be changing in the volume. It will be changing in the opinions. Okay, so the people and the investors will change their opinions in the head and exit some positions and so on. So first you need to see this one, and then when you have the information, and Bill Williams spoke about the chaos trading and the chaos principle, it's all about how you gather informations. I mean, if you're a professional trader, investor, or the bank, you need to gather proper information and understand the fundamental aspect. Okay, because that drives the market. That's what's bring the demand or supply on the market. Okay, so technical analysis is the simplest thing to do, the very simplest thing, by the way. So the fundamental reading and how to read the fundamental analysis and to go and do the research, basically, which I'm doing every day. So if you do research every day and see for the major currency pairs, I found that this most attractive is the USD Japanese yen because of the divergence in the politics. Okay, the USD CAD is also potentially the second one, but I don't like, for example, the euro. I don't like the pound at the moment. So I need something big to happen before I trade these currency pairs on the short-term perspective. Right now I'm focusing on USD Japanese yen, and I want to add into my winning position as long the price confirms this and the fundamentals remain the same. So I started to buy on the breakout of fractal 1 pip. This was a buy stop, and after that the price went very strongly, and I'm very good plus. The risk was like 65 pips. I'm already about 100 pips on 2 positions. Now, since I am short-term trader oriented, since I didn't find any fractal on the 4-hour time frame, I want to try to add new position today if I see opportunity. So I go lower frame, go to the 1-hour time frame, and I found some up fractals there. There is 3 up fractals and 2 down fractals for today. Okay. No, basically there are 2 fractals. Yeah, there are 2 up fractals here today. One on the Asia session, one here on the London session. So we got the 2 up fractals and 2 down fractals. Since we know the fundamental picture and that we don't look for any bearish opportunity, since it is very risky to trade, and we don't like to trade that as long the fundamentals is very, very strong in favor of USD versus Japanese yen. So now, once we know that we are in strong upward trend with the fundamentals is in our favor, we look for the buying opportunity only. Now, since I found the 2 up fractals, the first up fractal is broken at this point here. Okay, 103.22. I wasn't home at that time basically, but I took a little bit, like 3-4 pips away from that entry. Now the second fractal showed here, and I took position here. Okay, so this fractal, we broke this fractal. Okay, we broke in maybe less than 1 pip, but the price broke that fractal, and that's a second entry. So this was the first entry, this is the second entry. Okay, we got a prelim estimate employment change in US, but that it's not so significant, so we don't need to be scared to add at this point. The big news will happen Friday, and at that point I will not add positions for that day. It will be very risky. So, but today I can add, since this news is not it's only estimate, so yeah, it can change, but since we already get fundamental, we got a strong trend in detect, it's a very it's you know it's not so bad and risky to build positions at this point. So I adding positions here, and I will add and see what's going on with price action and try to benefit from my fundamental view I found a few days ago. Okay, so again, about this analysis, it's again, it's not about the strategy for itself. Okay, this is a pretty the pretty basic strategy, so you don't need pretty much anything. You can just trade with the price, with the support, resistance, and so on. I use the fractals because I really like the concept of the fractals, but I also, you know, I use the Fibonacci ratio and so on, but you don't need to complicate. Okay, you don't need too much to complicate your position, your technical analysis. You know, it's enough just to trade the basic concept and understand the fundamental analysis. Okay, because at the end of the day, the fundamental view is what drives the market. Okay, so I place the stop loss at this point on this, adding positions on this down fractal, which showed up at this point, which is very, I mean, very fine. You know, you can place the stop loss even to this lowest low fractal, but it's also okay to place this fractal here, because in terms of the, let's say, the volume analysis, this is also the test bar. So this is a clear test bar on the upward trend line, in the upward trend, and the price reacted higher and also created the fractal. So it's a very decent stop loss in this scenario. According to this price action, to place stop loss here, it's enough. Okay, there's like 25 to 30 pips. Okay, and try to reach like 100 pips, or even depend what the price will tell us. Okay, so again, forget about the fancy indicators, forget about what most of the analysts and the websites and they just want to sell your product. Okay, so basically you don't need that at all. You don't need that at all. You don't need the fancy indicators, the fancy systems, the fancy scanners or something like that. It's totally unimportant, by the way. It's a just trick because they want to sell you the product. Okay, in the real professional trading, what's the key point here is reading correct fundamental analysis, trying to read correctly the fundamentals from the currency pairs, from the central banks, because here in the forex, key players in the market are central banks, and if you know to read their politics and to read the comments by their key people, key persons from the central banks, then you are in very, very good. You already did a very, very strong job. Then the technical part is it's not at all complicated. It's a very basic. You don't need to be expert in the technical analysis, but you need to understand the fundamental picture, and to collect the informations every day and see what's going on with your major banks. Okay, so if the fundamentals, if fundamental will stay the same, for example, in USD Japanese yen, and I don't think anything big will change in the next 7-10 days, okay, then I will hold this and I will add and buy this as long the price action and as long the price action gives me the opportunity to buy. Okay, once I see that there is a big news incoming, okay, for example, this I think September 7 we have the ECB, the key meeting there, and it will be, you know, announced the program from ECB and so on. That is the big for euro, okay, and I will not touch the euro, and I will watch that meeting and so on and see what's going on there, if there is any big clue for Europe Central Bank to you know, to see what's going on, because if I don't see anything big there, I will not trade the euro. I will trade the pair and the central and the divergence in the fundamentals, which will give me the most potential profit and which will give me the lowest risk for trading as well at the same time. Okay, but again, this is a part of my mentorship program, and if you want to learn my method and how to analyze that fundamental aspect and how to read that and how to do the proper research of this, then combining this, I'm using fractals a lot. Recently I started to use a lot this one, and I'm very you know, surprised that how it's working basically. But without the fundamentals, it's, you know, I mean, you can use the same logic, okay, but if you don't trade the right currency pair in the right moment, it doesn't matter which strategy you use, okay. But I like the fractal concept once I understand the fundamental aspect, and I like the fractal concept to keep me and to give me the very good interest on the momentum, okay, since we trade the breakouts, since fractal trading is about the breakout trading. So yeah, I wanted to just share this with you so far, and I hope you will like my main target on my major positions from this point is around 106.70 area. So I don't see any big resistance, basically. I don't see any big resistance before that, let's say 106.70 area. So as long the fundamentals remains strong, I will just add and add and add, you know. So that will be my and I will not touch any other pair so far. I will just focus on this currency pair because I found a strong divergence between central banks, and the most recent comments from the Kurod and Yellen gave me that signal that it's a good time to start to build buying positions here. Okay, basically, as I spoke on the webinar, I like to trade the short term. I'm short term oriented, to trade 4 hour, even daily, or 1 hour to when I adding positions. But of course, on my mentorship program, I will teach you how you can trade intraday setups, you know, and position yourself on intraday BS. Okay. So, okay, right. That'll be all for this video. If you like my analysis and if you want to start my mentorship program, feel free to add me on the Skype. I will write my username in the description of the video. Also, feel free to comment if you like the video, and follow me on my work on Forex Factory, Trade the Art of Trading at Petar, Serbia. Wish you good trading for now, and bye bye.